Testing. What's going on? This is Travis Witherspoon from Carter Cow Capital, helping you fight for your financial freedom throughout the Forex market. Today is April 16th. It is about 10 o'clock right now, so we're actually in the Japanese session as we're actually going through this. So I want to make sure that I end up, one, inviting people to be able to come in on trading. This is our second time actually doing it on YouTube. This is the first time they're actually going to end up doing it exclusively on YouTube for our trade with Travis session. So I'm going to go through the disclaimer, get that out the way. I'm not a CPA, which means I'm not going to end up telling you whether to buy or to sell. But what I'm going to end up doing is teaching you overall education that you can be able to do and be able to use that for your overall trading aspects yourself. Now, understand that Forex involves risk, which means that there's a risk of you being able to lose money or be able to make money. So just keep that understood. And also, past performance is not indicative of future results. So understand that there are risks that's actually going along with this. So what we're going to end up doing is that we're going to take a look at a few different pairs to be able to hop in. And I'm showing my face right now. Once again, this is Travis Witherspoon. This is my second time actually doing this through YouTube. It's been a while since I actually just did it exclusively through YouTube. So showing my face right here. Typically on Mondays typically weekdays from 8:30 a.m. to 9 o'clock. We're actually on my Facebook Live page. And that's the business Carter Cow Capital business page. And obviously, if you like all the information that we end up doing, please make sure that you subscribe to the Carter Cow Capital page right here so you can be able to get more information, tap into everything that we're doing. So what we're going to end up doing is that we're only going to focus in on two pairs today, and I'm going to end up making this a very quick live stream video because there's really only two pairs that I'm very much interested in being able to get into right now at this particular point in time. Really, it's three. We want to take a look at the New Zealand dollar, but I think that currently right now as we speak, there's going to end up being some opportunity. Now we just need to be able to find where that opportunity is in the market to be able to go from there. So like always, when we're starting off any type of trading that we end up doing, we always look at the economic calendar first to be able to get an idea about what's going on with the economic calendar. So let's go ahead and switch over to that. On our economic calendar, we see that the Australian dollar off the highs, but we can see that the Q1 GDP is about to happen with the Chinese Chinese yuan. We have the GDP for the Chinese yuan to be at negative 0.8, which was actually better than what their consensus number was going to end up being, which was at negative 9.9. And they have the fixed asset investment at 16.1. So what we probably might end up seeing is that stocks may end up going for a little bit of a dip tomorrow. But it'll be something to just be able to keep in mind to see what happens with that. Now, overall, I typically don't trade the Chinese yuan. I typically trade the Japanese yen. So I'm interested in being able to see what the industrial production is going to end up being. Going in tomorrow, with tomorrow being Friday, there's not that much trading that I typically do on Friday. I look for positions to be able to get in and to be able to get out in. That's pretty much it. So we're looking for those opportunities. If there's something to be able to get into for the pair, then I will get into it. If not, then we'll wait until the next week so we can see what the weekly chart is going to end up doing for us and being able to get in. So if you're hopping in, please make sure that you end up typing in hey so I can be able to see who you are. Also, do me a favor, make sure that you end up subscribing to the Carter Cow Capital YouTube page. We actually end up holding videos that are not, that we don't do on Facebook for our overall group. Like tomorrow, we're going to end up doing bad beats for the first time. It's actually our first video where we actually end up talking about our worst trades that we've ever taken. It's basically like a story time. So very interested in being able to talk about that. Not a lot of people are actually doing that, or not a lot of people are actually willing to be able to talk about their losses. I can talk about all of the losses that I end up having because they end up making me a stronger trader. Okay, so we've looked through that. We can see that the Euro Consumer Price Index is going to end up coming out tomorrow. It is expected to have a medium impact. The U.S. has some stuff with gold, but it's not going to be all of that much. And then they have the IMF meeting that's going to end up happening with the Eurozone. So particularly, it's not going to be all that much. but it's something to be able to take a look at. I always look at these three pairs first and being able to get an example, which is oil. We always look at the U.S. dollar. We always look at the U.S. dollar index, and then after that, we always look at gold to be able to get an example of what's going on with those three pairs. So that is going to end up being the things that we're going to end up talking about today. And then after that, we're going to focus in on the Australian dollar, and we're going to focus in on the pound dollar for its overall positions to be able to get in. So since I have gold, I just got rid of it. Let's try this over again. Since I got gold up on the chart, let's go ahead and hop into what's going on with gold, and then after that, we'll be able to move on. So on gold on the monthly chart, we can see that the monthly is making higher highs and higher lows. We can see that currently it's basically almost peaking the tops that they end up almost having back in 2011. In 2011, it's at 1902. Currently, we are at 1909 with the market almost hitting the extension at 1959. You can go to the weekly chart. We go to the weekly chart, we can still see that there's a little bit more room to the upside with this D extension that's about to hit. That's basically end up selling off at this particular point, but I still think there's a little bit more upside. Now, you go to the daily chart, in which we're going to end up focusing in on a little bit more. We can end up seeing that the market was basically making this crown D extension, which meant that the U.S. dollar was basically taking control. But at this particular point, we can clearly see that this crown has been broken, meaning that we have only upside for this overall movement, and the upswing and the up fibs are going to end up working off of this one. So essentially what I'm saying is this. Now, instead of looking at downside movement, we're only expecting that it's going to end up being bullish. So at this particular point, we're just looking at downside movement right here. We're going to end up looking at a upside movement to this point. We have a D extension that's expected to go at 1759. And then after that, once it hits this overall position to be able to close out on that, then after that, we're going to end up looking to see that the market has or is going to reject and make a new position to the downside. So that's essentially where we're at right now at this particular point. Gold is expected to hit 1759. Currently, right now, is in a overbought position, meaning that we should be looking at some sales that could be happening in the near future on this particular pair. So currently, as we speak, if we look at what's happening with the Japanese yen, based off of what we're seeing with this, we can see that the Japanese yen is probably going to end up getting a little bit weaker. So that will be a pair to kind of stay away from at this particular point, just based off of that. Now let's look at the U.S. dollar index. What is happening with the U.S. dollar index is that we're waiting for this market to be able to pop to the upside and break this candlestick formation. Currently, as we speak, we can see that it's happening right now as we speak, and it's doing a retest at this particular point. This is a great look in terms of saying, okay, well, if we have this, then we should expect that the dollar is going to start to U-turn and start to make its movement toward the upside. There's expected growth that's expected to go to 1346. So currently, as we speak, if we're looking at it, if you're outside of the United States dollar and the United States dollar is not the currency that you basically end up trading, then that means that you could trade this one. The risk on this one would be about 45 points compared to going after the overall extension, which will end up being 92 points. So there's a lot of good risk reward in this overall value. Let's think about a few things that has actually happened. Stimulus checks is basically end up coming in. You're starting to see people starting to put a little bit more money in the market, which means that we probably should see some upside movement from that standpoint. So with that being said, now we should be looking at bullish movement from the dollar. Okay, so we know bullish movement from the dollar, and we see negative movement from gold, and that means that the U.S. yen is probably going to move towards the upside. Okay, so just keep that in mind. Won't have time enough to be able to look at that pair today, but that's something to be able to take a look at. Now, if we look at what's going on with oil currently as we speak, we can see that the market is basically moving through a downtrend. And on this downtrend, this market is expected to go to 14, 19 respectively. We can see last week that the market basically ended up having this huge pop up based off of the news that the market was going to end up doing some, was going to end up increasing the production on everything else like that. But basically, what ended up happening from there was that um, we can see that with everybody being in a lockdown situation right now, and you're not necessarily supposed to go outside of your home. The question that I ended up asking last week was, if the market is going to go to $28 a barrel, then who is actually going to end up spending that money, and where's the actual demand going to end up coming to be able to make that happen? Well, currently right now we're looking at it and we're seeing that the market is basically rejecting. So it kind of makes sense to be able to say that the market is going to end up pushing down to 14.19 before it goes up. So if we're looking at the U.S. Canadian dollar, I would say that there's a potential growth that the dollar is going to start moving towards the upside, which means that oil is going to go down to the downside. So I would keep that in mind for its overall positions and being able to get in. So let's bring that back to what we just said and kind of making sense of this from this overall standpoint. So essentially what we're saying is this. We can see that the US dollar is basically at a position where it's at a low price on the it's at a low price on the stochastic, and we can see that the US dollar index is starting to go up. Now, in the weekly chart, it probably might be a little bit differently. The weekly chart is probably done rejected at least to the 382 or getting close to the 382 at 12.41. But until that actually happens, we can see that the market is going to end up keep on moving toward the upside. So US dollar pairs are going to end up going up. So we should be looking at US dollar strength at this particular point. If we look at oil, we can end up seeing that oil is basically still at a position where it's going down. So that means that we should be looking at oil, we should be looking at Canadian dollar weakness. And if we're looking at gold, we can see that gold is almost at a de-extension, but it's in a overbought category. So that means that when we're looking at that, we should expect that the Japanese yen is going to be a little bit weaker at this particular point. So that's what we're looking at. So we're only going to focus in on two pairs today. Want to make this very quick. Want to hop into it, get a good idea about what's going on with the movement. We're going to start on the weekly. We're going to look at the Australian dollar, United States dollar. Now, the only reason why I'm looking at the Australian dollar, United States dollar is because of three simple reasons. One, if we look at the charts, we can be able to see we can clearly see that on every other pair right now, the Australian dollar has gotten to a position to where it's overbought on the daily. Now, when every pair is showing that it's overbought on the daily, there's no coincidence of the movement that's going to end up happening to the downside. So with that being said, when we look at the chart to be able to get an example about what's happening, we can see that the weekly is basically reacting with a downtrend line that has happened for the last few weeks, but it has not necessarily pushed all the way up to the crown D extension at 64.28 for this overall movement, and that's on a 2-hour chart. So currently, what we're looking for is a reaction off of this spot right here, and we're looking at it to the downside to be able to trade. If we notice that it actually ended up doing it right here, and it actually ended up doing it right there for its overall position. So it has not been able to break this purple trend line. So we're going to use this with we're going to use that as an indicator of saying, okay, well, if the market is not going to break this, then we should look to be able to sell, even though the weekly 382 has not been hit. Now, if the market turns around and the weekly 382 is not hit, and that kind of spells that the market is going to end up moving to at least a 128% and having some resistance before moving all the way down to its overall long-term de-extension. So that'll be something that we just have to keep in mind. Now, on the daily, on this overall chart, when we look at the daily, once again, we're trying to see if we can find an opportunity to be able to get in on this market, which means that we want to be able to get as much value as we possibly can on its overall movement. Currently, as we speak, we can see that the market is actually going through this swing. on the daily, it actually ended up breaking this purple trend line towards the upside, and then after that broke it toward the downside again. So we can get rid of that one right there. We can see that the market is basically reacting off of this uptrend line that we was actually talking about on the weekly chart, and it's close to the 618 off of that move. So currently what I would say is this: if we're going to end up being very conservative, then we should be looking at waiting for the market to be able to, one, give us that movement that the market is going to end up breaking to the downside. Oh, excuse me. So let me draw up my train of thought again. I'm sorry. So essentially what we're expecting is we look at this gray candlestick line. We want the market to be able to react with this uptrend line and then after that move toward the downside. If we get it right here at this particular point, which means that we're probably looking at the 618 as an overall position, then we're expecting that our risk, it will probably end up being right around 600 to 700 pips, with our reward probably being about 1,700 pips toward the overall downside. Now, if the market keeps on breaking this and it breaks above, let's say if the market ends up breaking above this trend line up here and it does not move, then it's going to react off of that X, and then after that it's going to keep on pushing up, meaning that it's probably going to hit within that hit that weekly 382 and start to move from there. If the market basically moves toward the downside, then what we should notice is that once it ends up breaking towards the downside, we have, get this out the way, that once it ends up moving towards the downside, we should see this. We should see a break. We should see a retracement toward the backside of it and then a push back down. Now, obviously, we're trying to get great value. And one of my automated systems, I've actually ended up making 120 something pips off of this movement already based off of that large candlestick. But what has still been proven to be shown is that the bulls are still actually in control at this particular point until that purple trend line is broken. And until that purple trend line is broken, I'm not going to be in the market as of yet, but I do see that there is value. So I'm very happy to be able to say that this is a pair that I would look at and be interested in being able to trade. But I want to make sure that I'm actually comfortable with the overall move and waiting for that move to be broken toward the downside. So US, Australian dollar, United States dollar, interested in being able to sell. Pair is not there at this particular point. Want to make sure that we're being careful about how that's actually being traded. Now, we want to talk about open positions right now as we speak. We'll talk about winning positions a little bit later on. But for our overall open positions that we have that are inside of the market right now at this particular point, we are in a U.S. Swiss franc trade at this particular point, and if we look at it, we can clearly see that the market is down 31 pips, and that means that the market basically ended up getting away from us yesterday. Yesterday was up 50 pips on the overall move. But we can also notice that the dollar is getting stronger. So that means that we should be expecting a little bit of consolidation while this market is actually moving. Now, what happened with the pound dollar at this particular point? Once again, this is the last one that we're going to look at today on this one. We can clearly see that the market ended up moving 1,900 pips towards the downside on this movement a few days ago, actually a couple weeks ago, when we end up having all of this scare with the coronavirus and with everything else that ended up going on. But since then, the market has basically rallied back up from that position. And from there, what we're trying to find is where the C is going to end up being. Now, the market has hit the 618, which means that the market has hit the golden ratio, which is a very important number for its overall Fibonacci traders. If you're interested in being able to learn a little bit more about that, you can go to our website at cartercowcapital.com/start here to be able to learn a little bit more information. But from there, what we should look at is this. We can see that the market is oversold, meaning that the dollar is going to get a little bit stronger over time. There's a 2-hour D extension that's at 1.2716, and I think that's a sweet spot on being able to get in. So I'm hoping that the market is going to end up rising up a little bit more, give us a little bit of value to be able to sell down. However, if the market is basically telling us that we should sell, then that means that we can do this two different ways. One, we can take a trade right now when the market is basically in a 2 hour high price and be able to sell it, knowing that we could be able to get something like this. Market breaks down, retests, and then keeps on going toward the downside. However, if the market ends up pushing up on this one, I expect that the number is going to end up being, I expect that that number is going to end up being at least up to the 2 hour day extension. And I would almost place in a pending order at that particular position, saying that there may end up being a position to be able to buy up at that spot, and then sell it back down. So I'm saying at least I at least want the price to be able to get up to this high price, possibly react with the 786, and then after that start to make its movement towards the downside and then go from there. I do not think it's going to end up breaking the A at 1.33. I just suspect that we're probably going to end up getting a little bit of value. I want to get a little bit more value in this overall trade position, and then after that, go from there to be able to trade towards the downside. Hopefully that ends up making sense for everyone that's being able to take a look at this. So that's what we're looking for at this particular point. We're trying to find that position to be able to get in on that overall pair. Right now we're at a high price. If we take a look at the 2 hour, the 2 hour is getting close to being in the sell zone. We can see that the market is at 54%. There's a 618 that has been hit, but the crossover has not happened on a 2 hour chart. So if we're looking at this trading this from a 2 hour perspective, I would say wait for the move to be able to go up. Once the market keeps on rising up on this price, you will end up getting a low price. From that low price, right, we'll be able to say, okay, this is a pair that we want to get in for being able to sell, let the market bounce back up, give a retest, and be able to sell from there down to wherever the extension is going to end up being on that spot. So that's my overall thought process on that overall move. But I'm very excited that it's probably going to end up showing up and it's going to give us great value. We just have to be patient upon being able to see where it actually is for what that overall move. Okay. Now, lastly, what we're going to end up doing is taking a look at the automated systems, see where they're at this particular point. We actually end up doing very well on. We actually end up doing very well on two of the pairs. We actually end up getting into an Australian dollar, United States dollar pair, and I think it was a pound Australian dollar pair. We actually end up making some money off of that. Currently, as we speak, between all of our overall trading systems, we are up 43 pips on all of those, just for its overall movement, which is good, and just being patient on that one. On our other system, we're looking at right now that the pound Australian dollar on our second trade is up 8 pips off of that overall move. So okay with that. Just trying to see where it's going to end up going off. We actually end up making 101 pips on the Australian dollar, United States dollar, and 78 pips on that last move. So we'll have recap videos on that one, just like how we end up doing on the New Zealand Swiss franc on how that pair ended up going in. So currently doing very well. I know personally for our overall class, we are up for this month. We are up for this month, which I'm very happy about. We still got a lot of work to go, be able to go. We end up making 181 pips on the U.S. Japanese yen while the market was still going down. Remember, we don't necessarily have that value right now as we speak and being able to look at it. But if you're interested in being able to learn a little bit more information, you want to be able to trade with us, we end up doing this live. Starting next week, we end up being simulcast on YouTube and Facebook Live at the same time. So people that are looking at it from YouTube, you can be able to ask your questions on YouTube. People that are looking at it from Facebook, you can ask your questions on Facebook. But until then, make sure that you end up planning your trading your plan. Everyone, y'all end up having a good one. I'll see y'all tomorrow bright and early at 8:30 a.m. from 9 o'clock for our Friday session of Trade with Travis.